Hi everyone, it's Justin. I wanted to give you a quick review of the autumn 2024 budget. I don't know whether, like me, you tuned in and watched the whole thing. It was very exciting in the House of Commons today. A lot of noise going on. There were a few times the Speaker had to stand up and sort of control the House. Interesting rebuttal from Rishi Sunak as well. But I'm here to tell you, or not about that, I'm telling you to help you as small business owners, landlords, potential investors, and maybe self-employed individuals as well, just about some of those tax changes that have come in today. And I'm going to kick his straight off. I think the biggest one that we'll all be sort of having to think about as small business owners if we're employing people, and maybe not even just employing people, is the changes to employers' national insurance. Big shake-up in employers' national insurance. Kind of from April of 2025, we're going to see that rate increase from 13.8% to 15%. That's a 1.2% increase. I think importantly as well is the threshold at which employers start paying it is going to be lowered. It's going to come down from £9,100 to £5,000. That's going to have a significant impact for small business owners. If you're a small business owner, you're likely have been set at £9,100 per annum on your annual payroll as a company director. That's really to stop employers' national insurance kicking in. At £5,000, that's obviously going to cause a little bit of an issue, and we'll probably be in touch with you, talking to you about kind of strategies as well, because we need to make sure that your national insurance stamp is paid. And obviously, when you're being paid on payroll, part of that process is to ensure that stamp. So it might mean that some people who haven't been subject to employers' national insurance all of a sudden are. It's probably in two director firms. It's not going to affect the situation terribly, because you will be able to go on and claim the employment allowance. And speaking of which, that employment allowance is going up from £5,000 to £10,500. So in the past, you'll be accustomed to, until your national insurance bill for the year was over £5,000, you wouldn't be paying anything. And actually, that's going to move up to £10,500. So while some of our kind of smallish clients might be sort of thinking, oh my God, that's a big increase in national insurance, actually the blow has been softened a little bit by that big rise in the employment allowance. If you're employing, like I am, quite a lot of people, I employ 10 people, that's going to need a little bit of thinking about how you're going to manage that, and just make sure we understand those costs and build them into our margin. And that could ultimately mean that you've got to step your prices up as well. Okay, I'll move on from employers' national insurance onto capital gains tax. I think if you're a landlord, investor or business owner, and thinking about selling assets, then you need to pay attention to this. The basic rate of capital gains tax has risen from 10% to 18%. That's for individuals in the basic income tax band. If you're in the higher tax band, then the increase is going to be from 20 to 24%. The system's going to be not unchanged for landlords, but if you're looking to dispose of a business using what's called business asset disposal relief, which a lot of people still call it entrepreneurs relief, there's going to be a shake-up of that as well. There's still going to be the £1 million annual lifetime allowance on that, but we're going to start seeing an increase. It's going to be a stepped increase. So we're going to have 14% in April of 2025 is going to be the new tax rate, and it's going to be a further hike up to 18% by April of 2026. So if you're planning on selling a kind of a significant business asset where business asset disposal relief is at play, you maybe just want to have a look and understand your options there as well. If you are a property investor, then there was a change, and quite a big change, to stamp duty land tax, SDLT. For those who are buying a second home or buying buy-to-let properties, that's classed as a second home, and you have to pay the higher SDLT rate on additional dwellings. And that's increasing from 3% to 5% starting from 31st of October. Yes, that's 31st of October, and the budget was on the 30th of October, so basically less than a day's notice in order for that to happen. I spoke to a solicitor actually this afternoon. I'm recording this on the 30th of October, and they've been running around trying to get some completions over the line, because even on quite a modest purchase, and this listener I was talking to was talking about it was in the £60,000 range for this transaction, that was still another £1,200 of stamp duty land tax. I don't think by the time you're watching this, it'll all be too late, but I think it might discourage landlords from buying properties. And, that's even going to apply if properties are being bought through a limited company as well. It's a higher upfront cost, and it's going to definitely, I suppose, impact on investment decisions. Are we going to acquire new properties? Are we going to expand that portfolio? We really, really need to understand those costs really, really carefully. What about corporation tax? Well, that's unchanged. Absolutely great. It's going to remain capped at 25%. The small profits relief is also staying in place. The government have basically said for the duration of this parliament that they're going to keep those rates the same. So it's going to give us a bit of surety that there's no nasty surprises on the corporation tax round the corner. Just remember those if you're a small business with less than £250,000 worth of profits, actually making sensible decisions about paying money into a pension or maybe investing in an electric car are actually good strategies to bring you out of what's called the marginal rate, which that effective tax rate from 50,000 to £250,000 is actually 26.5% because of how the fraction works. So talk to professionals about that, like myself, about how those sorts of things can help you and plan your tax out properly as well. Quick touch on inheritance tax. The inheritance tax threshold is going to remain frozen at £325,000. So a married couple with a main residence that's being passed to a direct descendant, the overall limit for those two individuals will remain at £1 million. So it's going to be at that point until 2030. There is a notable shift in here that unspent pensions and also certain things to do with agriculture and business property reliefs are going to be less generous. That's really, I suppose, targeting wealthier estates. But I think it underscores the need for estate planning. We need to think about what we're doing with those assets and speak to a professional nice and early as well. Changes to business rates for small business rates. For small businesses, the small business multiplier is going to stay at 49.9 pence in England, while the standard multiplier will rise to 55.5 pence for the 25-26 tax year. In addition, business rates relief will be increased from 40% for retail, hospitality and leisure businesses with a small 110,000 cap per property. That relief's going to really help protect the high street, but I don't think there was any particular kind of shockers in the business rates. I think the Chancellor was very, very careful that trying to avoid any kind of cliff edge situations. But there are some changes in there, and if you're in that situation paying business rates, just go and have a look at the changes as well. National minimum wage increase. I think this is very, very important if you're employing staff. There is going to be an increase in the national minimum wage, and that's coming up to $12.21 per hour. There are some big changes afoot in terms of creating what's called an adult worker rate. So we're familiar with the living wage rate, and that age has been coming down over time. Our current government want to really create just a single adult rate. So there's going to be some big increases on those 18 to 20-year-olds. We're talking in the region of 16+%. So again, if you're affected by that, go and have a look at the detailed legislation on how that's going to impact. It's a huge cost to swallow as well, and we've been trying to manage that over the last few years. And it's not just this government; it's the previous government where we've seen big inflationary increases in national living wage, minimum wage increases. It's there to design to support the low workers, but from a business perspective, we've got to think about how do we pass those on. And it does create a lot of pressure in businesses where you're trying to increase your prices. And we tend to say to clients, that's how we gauge our price increases as well, because we're so staff heavy. It is tricky. and I understand, I'm a small business owner myself, managing those living wage increases. Try and understand how that interacts with employers' national insurance. Again, very, very important. Next point is, I'm going to just very quickly just touch on private school fees. I know there's a few of our clients who are in this situation. VAT is going to start being charged on private school fees from January 2025. There's a few hidden consequences of that. Is obviously, you're going to have to try and swallow the increasing costs. Most schools are looking to pass that on to you. I think one of the things that was very quickly kind of went over in the budget is that business rate relief is being removed on private schools as well. So they're definitely going to be under huge pressure to pass on increases onto the parents where you've got children in the school. So I think there's some other things as well. I've got the buy-to-let landlord clients who have sometimes targeted investing in property in areas near private schools. Potentially demand might be lower, rental yields might be lower in those areas. It's difficult to tell. But I think it's, if you're in that position where you've got children at a private school, then I think increases are definitely coming, and maybe beyond the 20% VAT pass on as well. There were some additional points in the budget about sort of tackling tax evasion. I'm not expecting any of our clients really to be affected by that, but I think it's maybe some surety. There were some good noises. I think support level at HMRC has been pretty bad for kind of the man on the street, so to speak, or the woman on the street. Even for us as accountants with dedicated lines in, the service level's been quite poor. So I'm certainly hoping that we're going to get maybe some better service out of HMRC going forward, and hopefully tackle those things as well. One thing to note for small business clients, if you're maybe struggling to make your HMRC payments, there's potentially going to be increases to the amount of interest that HMRC is going to charge. The Chancellor made it very clear that she wants to collect in the tax that is owed, and they will have rates of interest on debts being set by HMRC at a much higher level. So really pay attention to making sure you're settling your PAYE, VAT, all of those kinds of debts, corporation tax on time as well. Support for electric vehicles, the Chancellor made it very, very clear that, she wants to support kind of sustainable investment choices in businesses. What she's talking about doing is widening the gap between probably the P11D benefit in kind gap to make it much more beneficial for you to be in an electric vehicle. That's great. I mean, there was no big changes on electric vehicles, and they're actually a great tax incentive for a lot of companies. Actually they're cheaper to run, all of those sorts of great things as well. There's a bit of tax benefit in there as well. You need to just maybe come and talk to a professional about actually doing that. I think just to kind of summarise the situation, there are some quite big changes affecting small business owners, like going from national insurance, your capital gains tax, the business rate changes, inheritance tax. This is just a quick summary, and I've done it really, really quickly as well. I hope I've captured and understood things. I've sort of absorbed the information really quickly this afternoon. So, don't just necessarily rely on this video. Go and do a bit of your own research, read a few more articles, go and speak to your accountant, or come and speak to me if I'm your accountant, and we'll kind of help you start planning for these changes. It is really, really important. And like I say, this was just a top level kind of review with the budget. Anyway, I hope you find that really, really useful, and I will see you next time. Thanks. Bye.